futures here in Europe, at least, we see futures that are all gaining. So take a look at the green arrows here, stronger on the DAX than they are on the FTSE, but still up about 0.8, 0.9, 1%. European markets now open live. Let's go ahead and take a look at the global macro movers. In the left-hand column here, you see, or you will see, the equity indexes. They'll populate once they open up, and they turn green or red if they move in a more severe way than, say, just 0.1% away from the base. Here you can see the IBEX in Madrid up 0.4% right now, as is basically the FTSE in London. These are typically the first European equity indexes to open up. The CAC 40 up 0.3% as well. So we're seeing gains really on the in Spain and France, as well as in the UK right now. The DAX takes a little bit longer to open, and typically when you see a bigger futures move, then the DAX takes even longer to open up. So you may have to wait a little bit to see the German stocks trade, but we do see continental stocks and British stocks, for the most part, trading higher this morning. There's the FTSE MIB in Milan open up 0.7% as well. So gains in Europe as global stocks mostly stabilized after the biggest two-day slide since June. Though NASDAQ futures are continuing to fall in the U.S. It looks like we're seeing a little bit of a rebound here, especially considering that the U.S. Equity market isn't going to trade today. Joining us now is Stephen King, Senior Economic Advisor at HSBC. Stephen, one of the things I'm noticing is we're getting we're getting mixed signals. You know, the Italians say maybe the recovery is better than expected, and then we're seeing signs that the recovery is slowing down. If you look at, for example, German industrial production, you know, the drop was bigger than expected year over year, and the month-over-month number wasn't nearly as much as had been expected. How do you see this recovery in Europe?
Well, frankly, it's going to be very, very patchy. The obvious problem is that you bring lockdowns to an end, which itself is quite encouraging, but there's a whole raft of different areas of economic activity that will still be very, very depressed, most obviously in areas like, you know, restaurants and hotels and so on. All sorts of retail areas will be quite depressed. And so the result is that you get an initial rebound, which looks quite encouraging. But it's unwise to extrapolate that in the idea that something's going to return to back where you were originally. So one example of this actually is the German industrial production numbers, because although there was a modest rebound in the latest month, they're still only at 90% of the level that they were at before COVID-19. So we're still talking about levels of activity which are very, very depressed compared with where they were earlier in the year. And even in the US, where you had a pretty strong, robust jobs report coming through on Friday, it's still a very mixed story whereby some people are going back to work and others are, of course, now permanently unemployed. So it's a very mixed picture depending on where you are in the economy. But the bottom line is the levels of activity is still very depressed. And as a consequence, we're not back to normal at this stage.
Yeah, Stephen, when you look at Europe and the pace of that rebound back towards where we were, but nowhere near it, what role is the consumer playing at this point? What does the propensity to consume look like for European consumers right now, who frankly got used to not going out all that much to spend vast amounts of money on coffee or lunch?
Well, it's certainly true that consumers are behaving differently from how they had done in the past. And one issue, of course, is a geographical issue, that people who were previously commuting to work are no longer doing so they're working from home. So it's quite plausible to suggest that the local cafes are doing quite well, but the cafes in, say, central London or in central Berlin are doing less well as a consequence of this reduced commute. So that's one big thing that I think has come through. But I think it's also pretty clear, not just in Europe, but elsewhere in the world, we know this from China, in fact, earlier in the year, that even when you end lockdowns, consumers are still not prepared to go back to how they were behaving previously. Now, in one sense, this is quite good news, because it means that the chances of the virus spreading to people who are the most vulnerable is perhaps lower than was true earlier in the year. But at the same time, it also suggests that there's been a considerable sort of change in behavior that is fundamentally altering the balance of consumer spending compared to where it was at the beginning of 2020.
You mentioned China. I wonder what your take is on, the story about their export growth. It seems like it continues to accelerate. If you look at it year over year, month over month, not so much. What's the Chinese economy look like to you right now, Stephen?
Well, there's obviously good news domestically in the sense that China was apparently on top of COVID-19, perhaps a bit better than some other countries. The official data suggests that the risk of infection and certainly the mortality risk significantly lower than in some other countries. And that, of course, allowed China domestically to unlock pretty quickly. But notwithstanding the fact that the export numbers are pretty good year on year, it is still the case that China ultimately is constrained by what's happening elsewhere in the world. You think about it, more than 20% of Chinese GDP is typically exported. And if the rest of the world is still in lockdowns of one kind or another, if levels of activity are more depressed than they were previously, the chances of China sort of regaining its earlier poise economically are still really constrained by what is happening elsewhere in the world. So you have to give China high marks, I think, in terms of its domestic recovery. But there's not much it can do about what's happening elsewhere in the world. And although we've seen a big pickup in exports, in many ways that pickup in exports again reflects some of the ending of lockdowns elsewhere in the world. I don't think it necessarily marks the beginnings of a sort of sustained export surge into the remaining months of this year and into 2021 and beyond.
You mentioned the export market for Chinese goods, Stephen, and of course one of those is the United States. In the US, the jobs data, as you suggested a little earlier, we got that on Friday, and it's a relief to many people, of course, that the unemployment rate is coming down. Does that remove any impulse towards further fiscal stimulus? Has it led you to reassess whether we get further fiscal support from the US government?
No, not really. I mean, part of the issue here is a strange measurement issue that if you're furloughed in the US, you count as being unemployed. If you're furloughed in the UK, you don't count as unemployed. So the unemployment numbers themselves are heavily distorted by the statistical treatment of people who are in furlough schemes. And of course, what's happened in the US is that as the economy's been unlocked to a certain degree, those who were furloughed have come back to work. They now count as being employed. That's helped to reduce the unemployment rate. And you can see in certain industries, there's been really quite a positive story in recent months, most obviously in construction, where construction jobs have virtually returned to where they would have been prior to COVID-19. When we look at retail and in particular into hospitality, the numbers there are really still very, very depressed. And I think in one sense, this is already reflected not so much in terms of fiscal policy, but in terms of monetary policy, with the Fed, of course, announcing this symmetrical inflation target with the hope, or at least the sort of commitment in one sense, to suggest that inflation might be allowed to run a little higher than 2% in years to come. Now, there are also all sorts of reasons for doing that, one of which is to suggest that monetary accommodation will remain for a lot longer than might otherwise have been the case. But the very fact that the Federal Reserve wants to introduce that level of monetary accommodation would suggest that there's still considerable concern about the longer-term consequences of COVID-19. And it is worth bearing in mind that we are seeing some really big increases in what we might describe as permanent job losses in the US. So trying to act on that will be important in coming months, and that does suggest that some kind of fiscal response is still very much needed.
Okay, thanks very much, Stephen. Stephen King, Senior Economic Advisor at HSBC. Coming up here on the European Market Open, willing to walk away. Boris Johnson tells the UK to prepare for EU trade talks to fail. What will that mean for businesses and the economy? This is Bloomberg.
rapidity with which we are moving relates more to technological advances in how you can make a vaccine even before you start testing it, that makes me confident that we are going to do everything we can to determine safety.
It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
I do double down on helping other Black founders, whether it's fundraising, hiring, growth, product, whatever it is that they need.
Welcome back to Bloomberg Markets. This is the European Open. We are 11 minutes into the session right now, looking at 1% gains across the major equity indexes, both here on the continent and in the UK. Right now, let's get the Bloomberg Business Flash. For that, we go to Laura Wright in London. Laura?
Thanks, Matt. Suez has rebuffed a takeover approach from Veolia. CEO Bertrand Camus said the deal undervalued the company and risked running into antitrust obstacles. Last week, Veolia offered to buy a 29.9% stake in Suez from Engie, the first step toward a full takeover to create an environmental services giant with more than 40 billion euros in revenue. China's exports kept on expanding in August. Output rose 9.5% in dollar terms from a year earlier, the third highest month on record, as business picked up with major trading partners. But imports expectedly fell, leaving a trade surplus of about $59 billion. Italy's economy will rebound faster than expected in the third quarter. That's according to Finance Minister Roberto Gualtieri. He sees output expanding by more than the 9.5% forecast in the government's latest financial plan. The figure is significantly above the 7.9% medium of forecasts compiled by Bloomberg. That's your Bloomberg Business Flash. Matt, Anna.
Thanks very much, Laura. Laura writes in London with your Business Flash. Now, the British Prime Minister, who likes Brexit, Boris Johnson, says he's prepared to walk away from trade talks with the EU rather than compromise on what he sees as the core principles of Brexit. The pound has weakened against all its G10 peers after it was reported that the UK is stepping up its preparations for a no-deal outcome. The next round of crucial negotiations gets underway in London tomorrow, so it's going to be a busy week on the Brexit front. Stephen King, Senior Economic Advisor at HSBC, is still with us. Stephen, when you look at everything the UK economy has been through over recent months, all COVID related, of course, and now we add in this extra layer of uncertainty around Brexit, what is your latest assessment of what kind of damage a no-deal Brexit would bring for the UK economy, given the damage we've already seen? Is it still of a very material nature?
So I'm beginning to feel a little bit cynical about this whole process. I think if you're a person who really wants to push Brexit through, you might think that COVID-19 provides the kind of perfect camouflage to hide the costs of a no-deal Brexit, because COVID-19 is so damaging that whether you can spot the separate effect of a no-deal Brexit in the immediate aftermath of the no-deal going through is another matter altogether. So I think that we're beginning to see a sense that perhaps this is a kind of kitchen sink kind of issue. Throw everything at it, and if it goes wrong, and no one's going to notice too much. Perhaps that's me being too cynical. But I think also the UK government has sort of recognised once again that doing a deal with the EU is frankly tricky. That the withdrawal agreement itself was something that led to some questions about, for example, sovereignty within Northern Ireland. And those who are particularly focused on sovereignty in the Conservative Party are still anxious about what's in the withdrawal agreement. So effectively, they're quite happy to sort of reopen it and rediscuss. Now, of course, the problem with this is that if you think you've signed a deal and it turns out that you haven't signed the deal, that one side turns its back on it, then trust begins to break down. And without trust, it's difficult then to build any kind of lasting future relationship. Having said that, it may be that some people in the Conservative Party, at least the Brexiteers, might say, well, actually, the world is changing. We need to form new alliances, not so much with the EU, but perhaps with the US, with Australia, with Canada, New Zealand, and so on. And in these circumstances, a specific trade deal with the EU isn't necessary. The other odd thing about all this, of course, is that one of the big debating issues is state aid. That the UK government's basically saying we want to be free to have state aid, not just within England, Wales, and Scotland, but also Northern Ireland, which is something which is more complicated within the withdrawal agreement. And the oddity there is that for a party that was very much behind the single market in the first place under Margaret Thatcher, that believed in the market as opposed to state aid, to suggest that suddenly state aid is the key thing that Britain wants is really a very strange sort of turn of events compared with what one might have thought just a handful of years or decades ago.
Stephen, what indications do you take from asset prices? Because I noticed that options and volatility in cable really don't show much concern about a hard Brexit. Indeed, the pound is right where it was when we started the year, and it's gotten an incredible lift from the lows that it hit in March at the beginning of the global lockdowns. I can't see, other than the FTSE's incredible underperformance year to date compared to other equity indexes globally, I can't see really, I can't see risk assets pricing in a lot of concern for a hard Brexit.
No, I think you're exactly right. I mean, the FTSE's underperformed partly because of the nature of the FTSE and the sectors that are quite heavily overweight within the FTSE compared with other markets. Whereas the US is tech-heavy, the FTSE is rather tech-light. As far as sterling is concerned, well, I think part of the story here is not necessarily a sterling-specific story. It is a story about the weakness of the dollar. The dollar's been soft for much of the year. Some people have talked about cyclical differences, hoping for a stronger recovery in Europe or the UK than in the US over the coming months. Others have spoken about perhaps the US losing its role as a sort of pivotal player in the global economy, its geopolitical might beginning to fall away, and that's another reason for dollar softening. But I suspect it's a simpler story than all of that. It's the fact that Europe, including the UK, has recently at least had a significantly improved experience with regard to COVID-19. And the US, of course, is still struggling. You look around the world and think, well, which are the countries that are doing well and which are doing less well? Well, the US has really struggled during the course of this year. And to a certain degree, I think that the movement in currencies has partly tracked the epidemiology of the disease. And as I'm not an epidemiologist, and I find it very difficult to forecast what's going to happen in the future, I do wonder whether that's something which makes currencies more of a random walk for later this year into 2021.
Stephen, can I ask about the furlough scheme in the UK? There's lots of debate, it seems, in some quarters about whether it should be extended. No word on any extension of it, no suggestion of an extension of it from the UK. I ask this because I see the Spanish Prime Minister saying that the Spanish government is willing to extend their furlough programme. Can the UK be, or will the UK be, some kind of outlier here?
Well, I personally think that there's a good case for extension. I mean, the reason for having furlough schemes in the first place was to try to encourage companies to hang on to workers who otherwise would have lost their jobs, in the hope that eventually, when you get some kind of more sustained economic rebound, those workers can easily go back to the jobs that they previously had. And that, of course, depends on getting some kind of control over COVID-19. Because that situation remains very uncertain, i.e., do we have a vaccine, do we have good antiviral drugs, what's the mortality rate associated with this latest increase in infection rates, there's a sort of strange idea of having a time limit on furlough schemes when actually government borrowing costs are very low, and you could in theory extend them quite a lot further. Now, bear in mind that in the UK, there's probably, I don't know, about 4 or 5 million people who are caught up in the furlough scheme currently. So some of those people, as it comes to an end, will unfortunately lose their jobs. And that means you have simply a delayed reaction to COVID-19 rather than something which gets rid of the problem altogether. My personal preference, therefore, will be to extend the furlough scheme if it were possible. But I'm also aware of the fact that each and every single year in the UK, about 350,000 businesses, mostly one-man and one-woman businesses, sort of self-employed arrangements, 350,000 businesses fail. And if you're in the business of protecting every single business and every single job, then of course you're going to effectively reduce the impact of market forces in determining where resources should be taken away from and where they should be going to. So you do lose some dynamism associated with furlough schemes and trying to sort of preserve the economy in some kind of economic aspect. So there are costs associated with it.
Stephen, it's been a great pleasure having you with us this morning. Thanks so much for giving us your time. Stephen King is a senior economic advisor at HSBC. Now, coming up, the Navalny affair puts Germany's support for Nord Stream 2 under pressure. We'll get all the details next. This is Bloomberg.
Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Welcome back to the European Open. We are 24 minutes into the session right now. We are looking at solid green arrows across European equities after a couple of days of a downtrend. Now you see the FTSE, the DAX, both up more than 1%. The CAC 40 up 0.9%. So a bit of a recovery here, even though we are on what is, for the U.S., a Labor Day trading holiday. Here in Germany, the support for the Nord Stream 2 gas pipeline by Angela Merkel is at risk. Foreign Minister Heiko Maas has linked the fate of the project to the alleged poisoning of Kremlin opposition leader Alexei Navalny. Pressure on Nord Stream has been growing since the German military said last week Navalny was poisoned with Novichok. Joining us now from Frankfurt is Daniel Schaefer, our Germany bureau chief. And Daniel, this is the first time we've had an actual cabinet member, one of Merkel's cabinet members, kind of link these two issues that she wants to keep separate. The pipeline is a commercial venture, or an energy security issue, and the Novichok poisoning allegedly is a political issue. Is she going to be able to keep those two things separate?
Yeah, Matt, that's actually the big question. In fact, we already had the second cabinet member with Jens Spahn also voicing a similar view as the foreign minister on this, linking the two cases, Nord Stream and the Navalny case. So the pressure on Merkel internally is definitely growing. We've also seen several senior politicians from her own party to link the two issues together. So the big question is, what is her thinking on this, and will she actually change her stance on this now? She herself has said 10 days ago that there's no link between the two things, between Nord Stream and between the Navalny case, but that was before the German military came out with the news that there has definitely been a poisoning of Navalny with the nerve agent Novichok.
Yeah, Daniel, 10 days seems like a long time in this story and in politics. Thanks very much. Daniel Schäfer, our Germany Bureau Chief, joining us there from Frankfurt. When we come back, we'll talk tech once again. This is Bloomberg.
The Boston Symphony Orchestra presents BSO at Home, a collection of concerts, at-home lessons, and behind-the-scenes stories to enjoy while you stay at home. Learn more at bso.org/at-home.
Europe does, as you say, have some catching up to do on that front. So we are expecting to see a little bit of strength coming through at the start of trade. How long will it last, though? The perennial question.
Welcome back to Bloomberg Markets. This is the European Open. 30 minutes, almost 30 minutes into the session, and we're looking at 1% gains across European equity indexes. Take a look at the Stoxx 600. This is the broader benchmark index across Europe, and you can see it's up a little more than 0.8% right now. If you want to see what's moving things, you can always look at the group ranked returns screen, GRR Go, in order to find out which industry groups are winning and which are losing. Today, all winners after the two-day lull that we had, or drop that we had in terms of risk assets. Now we have a rising tide, once again, lifting all boats. Actually, this happened on Friday morning as well, before it turned around in the afternoon, I will point out. Auto parts, the big leaders today, as well as automakers and auto parts makers, as well as industrial goods and services, and real estate and insurance. On the bottom, you see telecom, which isn't rising much, but still is rising, so better than a stick in the eye, food and beverage, and oil and gas. But pretty much everything gaining this morning. Now, SoftBank is reportedly sitting on $4 billion worth of trading gains, but those gains are tied to U.S. stocks, which were clobbered in the end of last week's trade. The report has sent shares of the Japanese conglomerate tumbling this morning. Here with the details is Danny Berger. Danny?
Matt, that's right. The NASDAQ whale has been unmasked. That is, SoftBank has spent billions of dollars spending it betting on derivatives tied to equities, specifically U.S. equity tech call options, so bullish options that would go up. Now, that's all well and good and would have done pretty well, giving them a $4 billion profit, but that profit has been unrealized, and this shows us just how risky of a bet it really is, considering what tech has done. Now, because of that concern, because we're really unsure how much of profit is being eaten away in the recent drop, we're seeing SoftBank in the Japanese session, it fell more than 7%. And look, the NASDAQ futures cash trading is, of course, closed today, still down about 1% today, so the pain for SoftBank could continue. But let's be clear, this did look like it had an impact on the market, and you can see that in my next chart with call option volume in the U.S. Again, this is bullish option. It's really taken off this year, and beginning of August, around this point, right before we get this really big ramp up here, Bloomberg reports that SoftBank is indeed using a strategy going in to U.S. equities, public equities specifically. And according to Goldman Sachs, over the past couple weeks, daily volume averaged $335 billion. That's more than 3 times the average back in 2019. So this big run up might have a tail wagging the dog effect, where you have banks on the other side having to buy the underlying. That bids tech shares up. So certainly it's starting to be believed that's part of the reason why we have seen this big rally in tech, which of course took quite the big pause at the end of last week.
And Danny, yeah, tech certainly the focus, and it will be, no doubt, as we open up US markets once again tomorrow. Talk us through what's happening with Tesla, though, because of course the decision not to include it in the S&P on Friday, that hit some hard. Run us through what happened.
Yeah, well, Tesla was already one of the more frothy sort of stocks last week that got pretty hard at the end of trading. But then at the end of the day, it's announced, as you say, the S&P 500 is not going to include Tesla. A lot of the run-up in the shares prior to last week had been over the idea that they'd be included in the blue chip equity gauge. But we all have to remember the S&P Global has a committee that decides what goes into the index. It's not an automatic just because it has a certain market cap it's going in. Some of the reason it might not have been included might have to do with questions over profitability metrics, but regardless, Tesla tumbled as much as 8% in post-market trading on Friday. It ended that post-market trading basically unchanged, but once the stock opens up again tomorrow on the cash market trading, we don't have that prop anymore that it'll be added into the index. It'll get a bunch of passive money, and without that there, it'll be a head scratcher to bulls, according to Wedbush Securities. Anna?
Danny, thanks very much. Danny Berger there with the latest on tech. A quick focus on what's going on in UK house prices. We've got some numbers out through from the Halifax. We've seen strong numbers from UK various sources around the UK housing market of late because, of course, of pent-up demand and the cut to stamp duty. What did all that do to house prices? Well, August Halifax house prices rising 5.2% from a year earlier. And the number from August versus July, for August versus July, a rise of 1.6%. A little bit of evidence of the pound pairing its losses, but really the Brexit headlines dominate on sterling. Let's get a Bloomberg First Word News update. Here's Laura Wright.
Thanks, Anna. India has overtaken Brazil as the country with the second most cases of coronavirus. The nation has confirmed more than 4.2 million infections. It's also the third worst country in terms of deaths. More than 71,000 people have died from COVID-19 in India. Protests have flared up again on the streets of Hong Kong, leading to hundreds of arrests. Activists marched through the Kowloon area and blocked a street with barricades. Their main aim was to protest Hong Kong's delayed Legislative Council election, which was scheduled to take place on Sunday but has been pushed back a year due to the coronavirus pandemic. The demonstrations end a period of relative calm since the implementation of a national security law. Novak Djokovic has been kicked out of the US Open in extraordinary fashion. After losing a game, the tennis world's #1 angrily smacked a ball behind him, hitting an official in the throat and prompting the chief umpire to suspend the match. It's a stunning end to his 29-match winning streak and bid for an 18th Grand Slam title. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna, Matt.
Thank you very much, Laura Wrights, with an update here in London. Now, the UK is stepping up preparations for Brexit trade talks to fail. Boris Johnson's set to tell the European Union he's willing to walk away rather than compromise on core principles when the two sides meet in London this week. The Prime Minister is urging the bloc to rethink its positions and says there's still an agreement to be had ahead of an October 15th deadline. For more, Bloomberg's Maria Tadeo joins us from Brussels. And Maria, you and I have been following this for so long now. We know there are very few facts in these negotiations. There just seems to be positioning, dark art, smoke and mirrors, and a ticking clock, essentially. What are you looking for in terms of the state of play as we head into this week?
Right, Anna, there's a lot of optics that also go into a deal like this, but I think it's very fair to say the tone has become much more aggressive over the past 24 hours. The UK delegation now saying they see October 15th as the final deadline to get this deal done. Why October 15th? Because that is when the next European Council meeting is supposed to take shape here in Brussels. European leaders are expected to come here, sign off a potential deal, and then it should be ratified. But that, of course, is a deadline set out by the UK. When you speak to European officials, they tell you that may not be the case. It could really go to the wire, and you're looking at potentially a negotiation closer to Christmas. What's also interesting, and we just heard from Michel Barnier, who's still very much leading the negotiation on behalf of the EU, is this idea that the UK could introduce new legislation to water down the Brexit agreement. And he's just saying on radio that he's worried about this, he's preoccupied, he's saying that it's not a good idea to walk back on an agreement that was already agreed by both sides, and also repeating this idea that before we get a full comprehensive package, there needs to be a deal on the fisheries. That is something that at this point the EU is not willing to compromise on.
All right, Maria, thanks very much. Maria Tadeo, they're wrapping what we know so far about the negotiations out of Brussels. Coming up, we speak to the CEO of the Russian Direct Investment Fund, Kirill Dmitriev. That's next. This is Bloomberg.
We are above forecasts. 1,800,000 jobs is the total non-farm payrolls, with 17,000 additional jobs added in terms of net revisions.
You still got 1.8 million with a big decline, almost a full percentage point drop in the unemployment rate, which will move to single digits easily in the summer and fall.
Leading up to this data, there was a lot of reason to suggest that the pace of increase had slowed. And in fact, what we see in this data is, of course, it has slowed. But the good news is that it is continuing. And it is continuing despite some slowdowns that we're seeing around the country as a result of an increase in cases.
People tend to focus on the growth rate. The big issue is the depressed level of spending and income in the economy, which is reflected in the level of the unemployment rate of around 10%.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
This is a step in the right direction. Perhaps it's a harbinger for more changes in the future, like the completion of the banking union.
Welcome back to the European Market Open. 41 minutes into Monday's trading session, and European equity markets up 0.8%. The US, of course, will be closed today. Now, global trade is currently under the microscope, but even after the coronavirus crisis, it still faces the threat of US-China tensions and an uneven recovery. And the agency that greases the wheels of global commerce, the World Trade Organization, is currently without a leader. So what are the key challenges the WTO faces, and what does it actually do? Anne-Marie Hordern takes a look.
This year, the World Trade Organization is 25 years old. Based in Geneva, it deals with the rules of trade between nations and promotes the free movement of goods and services all across the globe. Now, it finds itself at perhaps the most turbulent point in its history. The WTO has long been at the center of controversy and political wrangling. The latest round of negotiations, the Doha Development Agenda, started in November 2001, stalled in 2008, before a partial agreement in 2013. Since then, little progress. Some of the trade disputes span decades. The case over government funding to Boeing and Airbus is now 16 years old. The U.S. was given the green light to slap $7.5 billion of tariffs on the EU, the biggest award in the organization's history. But recently, the U.S. hasn't been a fan of the WTO.
The WTO was the single worst trade deal ever made, and if they don't shape up, I would withdraw from the WTO.
Over 2 years, the U.S. refused to consider any new candidates, the WTO's appellate body. As terms expired, it meant the main forum for settling global trade disputes lost its ability to rule on new cases. Good news for President Trump, the self-proclaimed tariff man. Bad news for free trade. Then the WTO's Director General, Roberto Azevedo, decides to resign a year early. The organization, under fire, needs a new leader at a time the global economy is also feeling the heat. Pandemic, recession, a battle for trade supremacy, and the U.S. presidential election. The stakes couldn't be higher.
Bloomberg's Anne-Marie Hordern there, looking at the challenges facing the WTO. 8:43 here in London. The US, India and Brazil now account for more than half of the world's coronavirus cases. The total number globally now topping 27 million. European hotspots are spiking once again, with infections in the UK increasing the most in more than 3 months. And the pathogen is spreading in France at a, quote, worrying pace. So the race continues to find a safe and effective vaccine. Phase 1 and 2 trial results of Russia's candidate were published in The Lancet on Friday. It's said to have induced an antibody response in all participants with no serious adverse effects. Health officials, however, have criticized the country for approving the shot even before clinical testing at stage 3 had been completed. Joining us now is Kirill Dmitriev, the CEO of the Russian Direct Investment Fund, which is backing, of course, this vaccine. Kirill, very good to speak to you. Thanks so much for coming to talk to us. Isn't it premature for Russia to have approved this vaccine before phase 3 trials are substantially underway?
No, not at all. First, we were criticized, but then we saw that Britain announced that they may follow the suit. US FDA said that they may want to register before phase 3. And you really need to understand technology and what Lancet published, which is our technology is based on human adenovirus vector, which is an approach that has been proved safe over the last decades. For example, US military gives all of its conscripts adenovirus human vaccine since 1971. So it's very different from mRNA, monkey adenovirus approaches that NU and other people are using. So not only do we have great data in the Lancet, but of course, it's exactly great and right that Russia registered it before phase 3. And of course, we now have post-registration trials of more than 40,000 people in Russia and also we'll start trials in UAE, Saudi Arabia, Philippines, other markets.
You mentioned those other countries, Kirill. How many other countries have expressed interest in buying, and how many have signed binding agreements to buy this vaccine?
Well, we have interest in more than 1 billion doses. We'll be announcing binding agreements starting from this week. There are more than 20 countries who would like to pursue it, and countries who want to pursue it, they understand the big difference. That, for example, human adenovirus approach, as I mentioned, has been studied a lot, and monkey adenovirus and mRNA approach, really there have been zero long-term studies of long-term effects, including possible increase of risk of cancer or infertility. So we are confident that most of the countries would want to have human adenovirus vector vaccine in their vaccine portfolio. Now, we are not the only ones who are doing this. It's also CanSino, it's Johnson & Johnson, but there is no question that human adenovirus vector is by far the most researched, safe, and proven technology, and more countries understand and appreciate that.
Any European countries, Kirill, that have reached out to get doses of this vaccine?
Well, we're in some discussions with European nations, but of course they make quite a bit of focus on mRNA, on monkey adenovirus vaccines, and we understand there will be a pledge of some of the producers today about those vaccines. But it's just important, I don't want to repeat too much. Those vaccines, no long-term research, whereas our vaccine is based on vaccines that Russia has done 6 years ago, went through all of the phases of clinical trials, has been approved. So I think politics prevents some of the countries to work with Russia, but most of the countries, Latin America, Middle East, Asia, really are pursuing this incredibly strongly. We will produce more than 300 million doses of our vaccine in India, and we're building very strong international partnerships.
Kirill, do you know if President Putin has been offered the vaccine, and if so, has he agreed to take it? I know that Moscow's mayor and I think the defense minister, similar ages to President Putin, have taken the vaccine.
Well, I don't know about President, that his daughter took it, obviously Mayor of Moscow, defense minister, our industry minister, I took it with all of my family, including 74-year-old parents. And we are confident in the vaccine because we know that platform is incredibly safe. And for example, one of the criticism, people say, well, it's only 76 people and AstraZeneca did 1,000 people. But if you look at AstraZeneca studies, they gave 2-shot regimen to only 10 people. And after the studies, they said, okay, we'll only do 2 shots going forward. That's the right way. Well, if you use 2 shots, then Russia have given 4 times more people the 2 shots than AstraZeneca did. So there are lots of details, and people who understand the science are really confident in the Russian vaccine. Once again, we are supportive of many vaccines out there to exist, but it's very important they checked for long-term consequences, and they're very thoroughly studied, as you said, before they get approved.
Kirill, the Russian Direct Investment Fund is one of the world's leading sovereign funds. And I wonder what the effect has been of the allegations by Germany that an opposition leader in Russia, Navalny, was poisoned with Novichok, a nerve agent that only the Russian government has access to. Is this concerning to you? Is it concerning to some of the partners with whom you work?
Well, we do not do politics, and obviously vaccine is our effort to save people, and it should not be politicized. All I can say from about Navalny case is what I read in newspapers, and what I understand, Russia government is very open. It let Navalny out of the country to Germany per the request of the family. As I understand, there are statements that they're willing to fully cooperate on this investigation. They just need to get more data. So I think it's very important that Russia is frequently politicized. But if you are a person in Peru, for example, you want to make sure you get access to a good vaccine, and we want to make sure at least vaccine efforts and efforts to save people are not politicized as many other aspects of Russian affairs are.
But does this tension between Russia and the West, Russia and Europe in particular, Kirill, does it not get in the way of cooperation around the vaccine?
Well, we do our best. We basically know that we have the best vaccine out there. Russia is in a leadership position, and I think many people need it, and many people understand that they need to have a safe approach to save their people. And once again, we believe that politics should be separate from healthcare, politics should be separate from COVID, because those are very important issues. We are not doing anything on politics. We are just trying to save as many Russians and other people as we can in other countries. And we want to share information that, frankly, is hidden in the West, that there are no long-term studies of mRNA and monkey adenovirus on cancer and infertility. Those are very important points. They have nothing to do with the case you're mentioning, and they need to be investigated as well. And we are publishing an op-ed today to raise those questions, because people in the West need to have real access to facts, real access to information, not only on Russian affairs, but on lack of clinical trials of mRNA and monkey adenovirus vaccines, of long-term clinical trials of those products.
All right, Kirill, thanks very much for your time this morning. Really interesting stuff that you're working on. We love hearing about it. Kirill Dmitriev, Russian Direct Investment Fund Chief Executive Officer. Up next, gold failed to get a lift last week as the NASDAQ headed south, but it may be a different story this week with central bank action on the cards. This is Bloomberg.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to the European market open. 54 minutes into a positive session for European equity markets. Remember, the US is closed today. Joining us now is Bloomberg's Markets Live editor, Eddie van der Veld. Very good to speak to you, Eddie. And you've written a really interesting piece today about shoe leather, about how doing your homework helps if you're looking for gains on ESG. Is the point of your piece that you have to be an active investor if you want to look for ESG gains rather than a passive one?
And I think that's exactly right. I think ESG at the moment is very hard to call. It's very hard to see where the opportunities lie. I think everybody is trying to package ESG and turn it into ETFs and turn it into products that people can passively access. But I think to really understand whether a new product or whether a company is act ethically is very hard to see in data, but it's easy to see when you speak to people, when you know the company really well. And what we've seen is that companies that are truly ethical in the long run tend to outperform, but only if you identify them before the market identifies them as ethical companies. And I think that's the key. I think at the moment, yes. Sorry, Matt, carry on.
I'm just wondering, to make it easier, especially for Robinhood investors, is there any kind of basket they can buy rather than having to go through all the individual companies? I mean, is there an exchange-traded fund?
I think that's the key. I think there are certain metrics like female board membership that you can track, right? But there are other metrics that are much harder to track, in how people treat their staff and so on. And I think those are the things that matter in the long run. But I think just because Robinhood investors and all investors really, they can access these things passively, but I think the real opportunity for all of them to shine is to look at the company statements, look at the sort of businesses the companies are in. So I think there is an opportunity for all investors to beat, these sort of quantitative funds.
Eddie, thanks very much. Good to get your thoughts. Bloomberg's Market Live editor, Eddie van der Veld. That's it for the European market open. European equity markets trading higher. Stay with Bloomberg Television. They'll be taking you through all of the European market action today. Up next is surveillance. US markets are closed. US futures, or NASDAQ futures, continue, though, to point to the downside. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market, it's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Some things you see coming, some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Johnson plays hardball. The UK steps up preparations in case Brexit trade talks fail. Officials plan a law to water down the withdrawal agreement. On hold for now, the ECB is unlikely to make any moves at this week's meeting, but Christine Lagarde may set the stage for further easing this year. And risky business SoftBank plummets on reports it made big bets on derivatives linked to U.S. tech. The NASDAQ sell-off looks set to continue. U.S. stocks are shut for Labor Day. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lacqua here in London. As we were saying, U.S. stocks are actually closed today, but there is a bit of things going on when it comes to European stocks, and certainly when we look at some of the UK assets on the back of what we heard about Brexit. Now, European stocks are climbing. Analysts seem to be speculating that the market could be relatively resilient as Asian and U.S. markets start their pulling back. The pound actually weakened. I'm concerned that the UK is inching closer to a no-deal Brexit. And then we're also looking at euro-dollar 118.37. Now let's get straight to the Bloomberg First Word News. Here in London is Leanne Gerrans. Hi, Leanne.
Good morning, Francine. India's overtaken Brazil as a country with the second most cases of coronavirus. The nation has confirmed more than 4.2 million infections. It's also the third worst country in terms of deaths. More than 71,000 people have died from COVID-19 in India. Protests have flared up again on the streets of Hong Kong, leading to hundreds of arrests. Activists marched through the Kowloon area and blocked the streets with barricades. Their main aim was to protest Hong Kong's delayed Legislative Council election, which was scheduled to take place on Sunday, but has been pushed back a year due to the coronavirus pandemic. The demonstrations ended a period of relative calm since the implementation of the national security law. And dramatic scenes in tennis. Novak Djokovic has been kicked out of the US Open in extraordinary fashion. After losing a game, the tennis world #1 angrily smacked a ball behind him, hitting an official in the throat and prompting the chief umpire to suspend the match. It's a stunning end to his 29-match winning streak and bid for an 18th Grand Slam title. Global news 24 hours a day, on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, the UK is stepping up preparations for a no-deal result on trade talks with the EU. Boris Johnson says he's willing to walk away rather than compromise on what he sees as the core principles of Brexit. At the same time, his government is drafting a new law to dilute the legal force of the divorce deal he signed with the bloc if outstanding issues on Northern Ireland cannot be resolved. Well, joining us now with more is Ed Evans, who leads our Brexit coverage. Ed, what does this mean? If you do preparations in case of a no deal, do we take from it that the government would be happy with a no-deal Brexit?
Correct. I mean, what Johnson is doing is dramatically ramping up the threat of a no-deal Brexit at the end of the year. The comments he's got about, how he about not compromising the core principles of Brexit, that is a continuation of the government's rhetoric over the past months and years. But the really dramatic move today is going to be the internal market bill, and this is really ripping up parts of the divorce agreement Britain signed only a year ago. Now, this is a matter of huge concern in Brussels, where the UK is in negotiations to sign a trade deal. What incentive do you have to sign an agreement if your partner has just ripped up an agreement that it signed only a year ago? So, very, very big development. Whether we get to no deal is, however, another thing. Don't forget, we've been here before in Brexit with Britain threatening no deal, only for it to then sign a deal.
So, Ed, where are we on that? Is this, when do we find out whether this is a negotiating tactic or whether actually, Boris Johnson prefers, if there's a no-deal Brexit, does Boris Johnson gain in popularity?
Just to back up on your first question, when do we find out this is a no-deal Brexit? Really, Britain has got until October the 15th to get a deal together. That's the deadline that the EU has set to come to an agreement. Now, it's very possible that if they are close or there's a possibility of a deal, that deadline is extended, and it could go into perhaps November. Don't forget, the EU's got very little incentive to actually walk away from these talks. Don't forget, it doesn't want to be blamed for this. The hard deadline here is absolutely December 31st. That's the cut-off point. If there is no trade deal in place by then, Britain defaults and leaves the bloc without and trades on WTO terms. Does that mean, what does that mean for Boris Johnson's popularity? It's hard to say. I mean, you've got a number of people in his own party who will be very happy with that result. Don't forget, there are people in the Tory party who would be perfectly comfortable with that result. I think the question he's got is what are the economic costs of doing that, because there will be an economic cost to leaving. There are extra frictions on trade, as we reported last week. There's potential for huge disruption at the border. Coming after COVID and the economic fallout from that, is that something that the British government really wants to risk? That's the decision he's facing.
Ed, thanks so much. Ed Evans there, who leads Bloomberg's Brexit coverage. Now, joining us this morning is Frédéric Ducrozet, Global Strategist at Pictet Wealth Management. Frédéric, thank you for joining us on a Monday morning where there are many questions and few answers. We'll get onto the ECB in a second, but how does Europe, or how does Euro actually react to no-deal Brexit come the end of the year?
It's difficult to say. This has been a very tricky and difficult political game, and I would actually argue that it's not that only bad news that we hear this kind of threats and ramping up of the rhetoric in the UK, because we need to get to this kind of paying threshold for both sides to make concessions. And actually, in terms of state aid, in terms of internal markets, as you just mentioned, there are still grounds for concessions. I think there is room to get to a deal. It's just that the timing is very difficult, and probably we get more stress before it gets better.
So, Frédéric, does it mean that when you're modeling, the European economy and the UK economy, that you're assuming an 11th deal, an 11th hour deal, or that you're assuming there's we go to WTO rules come January 1st?
No, we're still assuming a deal at the end of the day. Again, it's in no one's interest. It would be very damaging. It comes on top, of course, of the effect of the pandemic, and this will be also an argument, in terms of the political backdrop, to say, look, we don't know what exactly comes from Brexit, no deal Brexit, or the pandemic. It will be a mixed bag and very negative for the UK economy. So this is clearly a risk, but we're still assuming a deal at the end of the day.
So, Frédéric, what does it mean for where you find value or you like asset classes? Is there anything in the UK that you like, or would you, rather look at the Euro region?
I think in both cases it makes an even stronger case for fiscal stimulus. We know that despite all the rhetoric about potential tax hikes in the UK at some point, despite the prospect of reducing fiscal spending also in Europe at some point, I don't think that will happen. The reality of the economy will be that it's too weak, the recovery will remain too fragile for the government to afford scaling down the fiscal stimulus. So I think in both cases it makes a strong case for domestic equities, for credit in some cases, of course bearing in mind that the central bank is still also buying a lot of those assets and could buy more in the future. So this theme remains in place, and on top of that, on the EU side at least, we have all the green economy thematics which will remain very much in place also in the coming years.
So how do you buy the green thematic from Europe?
We have, on our side, we have thematics funds, of course, dedicated to this kind of topics where we select the best companies. You could think also in terms of construction sector, in terms of real estate in some cases, that there is potential. The EU recovery itself is also fragile. Don't get me wrong. I mean, we don't know yet how strong the fourth quarter will be in particular after all this noise in the GDP data we've seen. But overall, this is something that is going to be well supported by the recovery fund, which I remind you will only start, really to be implemented by the beginning of next year. On top of that, you had the French stimulus package, for instance, last week, which also is dedicating about 30 billion to the green economy.
Thank you so much, Frédéric Ducrozet there from Pictet Wealth Management stays with us. Now, coming up, looking ahead to the ECB's rate decision this Thursday, the European Central Bank monetary policy decision could be in the shadow of their U.S. counterparts. We'll talk Europe next. This is Bloomberg.
things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. SoftBank has tumbled in Tokyo after reports it made substantial bets on equity derivatives. The Japanese conglomerate is reportedly sitting on $4 billion of trading gains, but they tied to U.S. stocks, which were clobbered in last week's trading. That's raised concerns. SoftBank is embarking on a risky endeavor into unfamiliar territory, which could lead to substantial losses like those suffered after betting on office sharing startup WeWork. Suez has rebuffed a takeover approach from Veolia. The CEO said the deal undervalued the company and risked running into antitrust obstacles. Last week, Veolia offered to buy a 29.9% stake in Suez from Engie, the first step towards a full takeover to create an environmental services giant with more than 40 billion euros in revenue. Now, China's exports kept on expanding in August. Output rose 9.5% in dollar terms from a year earlier, the third highest month on record as business picked up with major trading partners. But imports expectedly fell, leaving a trade surplus of about $59 billion. And Italy's economy will rebound faster than expected in the third quarter. That's according to Finance Minister Roberto Gualtieri. He sees output expanding by more than 9.5%, forecast in the government's latest financial plan. The figure is significantly above the 7.9% median of forecasts compiled by Bloomberg. And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. Let's take a look at what you should be watching out for this week. Now, the next round of Brexit talks begin tomorrow. We'll get second quarter GDP figures. Also, for the euro area, we'll be looking at for whether the recovery is stalling as cases surge in the region. On Thursday, it's the ECB's rate decision. As signs of a stalling recovery emerge, we'll be looking for new forecasts for growth and inflation, which may also offer clues on the next steps that the central bank may take. A press briefing by ECB President Christine Lagarde will also follow. Well, still with us to talk more about Europe is Frédéric Ducrozet from Pictet Wealth Management. Frédéric, first of all, I mean, core inflation collapsed in the euro area. How will the ECB actually deal with that?
Well, it was a shocking news, to be honest, even for those who are expecting lower core inflation, 0.4%, lowest ever. And there is no example in the history of the ECB where the central bank would not respond to such a downside surprise in inflation. But it's a tricky one for Christine Lagarde, because you also have her executive board member and colleague, Isabel Schnabel, who just said a week ago that there was no need for the ECB to add to the stimulus. So it's a bit of a tricky communication exercise that comes up on Thursday. And I would expect, at the very least, a signal that more easing is likely to come.
More easing that could actually be a rate cut, Frédéric? And, would this be a signaling of a rate cut, or could we have a rate cut as soon as Thursday? And how would the markets take it?
A rate cut on Thursday would be a big surprise. But even if President Lagarde just hints at the possibility of reopening the door to rate cuts, that would be probably already some kind of surprise to markets. And it's true that it's been historically the response from the ECB to an unwarranted tightening in financial conditions, including with the exchange rate. The exchange rate is up 10% against the dollar. It's up 4% since the last meeting on a trade-weighted basis. This will have a very large and significant impact on inflation projections, on core inflation, which, as we just mentioned, is already very low. This is not something the ECB can ignore, although I think the more likely policy response in the short term will be to signal a stepping up in the pace of PPP purchases in QE, which has been slowing down quite significantly since the summer.
Frédéric, give me a sense of, when you look at euro strength, and we've heard a number of ECB officials actually say this is something that's positive, but is this euro strength, or is this simply dollar weakness? And at what point does it become problematic for the ECB?
That's a good point, and a big difference with recent years. Also a big difference with the US, by the way. The fiscal outlook has been improving dramatically in Europe. We just mentioned the French stimulus package last week. We have the German one. We have the EU recovery fund. This is a massive difference with previous years. So the ECB will disagree on many things, probably. The chief economist and Isabel Schnabel will probably disagree on the need for immediate stimulus, but they will most likely agree on the fact that the euro is indeed reflecting rising confidence in the single currency. Does it mean that the ECB can just hold off and wait to see what the Fed does? I don't think so. They will have to at least say that they won't tolerate an unwanted tightening in financial conditions. And again, there are many options to deal with that. Either you increase QE, perhaps even earlier than our expectations, which is for December this year, or you have to signal a rate cut, which, by the way, in that case, would have to come along with, in my view, an increase in the tiering multiplier to mitigate the impact on the banking sector.
Do you feel, Frédéric, like once again the ECB is the only game in town? And how problematic will that be longer term?
No, I think that's, again, the difference. I mean, you just mentioned the Italian finance minister signaling a stronger recovery. That may be wishful thinking at this stage, but there's also this hope that the market is not fully buying at this stage, but could be into 2021, that the policy mix in Europe will change forever. There will be no going back on this promise to launch this EU recovery fund. It could be gradual, it could be slow to bear fruits, but it will come. And more importantly, I would even argue, the fiscal rules, the 3% deficit, they just went away and they will not go back. I don't expect any kind of austerity in the next couple of years because the economy won't be strong enough to afford it. So that's the big change, and indeed the hope for the ECB to have a final move, a final easing step by the end of this year, increasing the PEPP envelope, but then perhaps that would be the final one, and finally the ECB could wait for fiscal policy to take over.
Frédéric, thank you so much, as always, to make us smarter. Frédéric Ducrozet, their global strategist at Pictet Wealth Management. Now, up next, SoftBank's foray into option trading runs into problems as a Japanese investment company gets smashed by the sell-off in tech. We'll have more on that next. This is Bloomberg.
Me gustaría decirle a los empleadores que fueran más humanitarios con sus trabajadores, que les hagan valer sus derechos. Y estábamos viviendo en dos casas, en unas 50 personas y en la otra otras 50. En cada casa había 5 habitaciones. En cada habitación había de 3 a 4 camas abarrotadas. Vivíamos de 6 a 7 personas. Un baño para cada habitación y una cocina para todas. vez que nos atendieron en el hospital, al salir nos avisó una compañera que ya nos habían reportado a migración. Gracias a Dios ahorita de salud yo estoy muy bien, pero en lo moral no estoy muy bien, porque a causa de esta enfermedad yo perdí todo, perdí mi trabajo. Yo creo que mi caso resulta un gran problema de cómo las personas migrantes estamos en riesgo de explotación por parte de los empleadores.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, SoftBank reportedly sitting on $4 billion worth of trading gains, but those gains are tied to U.S. stocks, which were clobbered in last week's trading. Well, the report has sent shares of the Japanese conglomerate tumbling this morning. Here with the details is our Danny Berger. Hi, Danny.
Hi, Francine. That's right. What's being called the NASDAQ whale has been unmasked. That is, SoftBank built up a position of billions of dollars betting on U.S. equity derivatives, more specifically call options surrounding tech. So that's bullish derivatives that those shares would move higher. Now, that's all well and good, but it's certainly a risky bet. It may have allowed them to get a reportedly $4 billion worth of gains, but those gains are unrealized. That's the key there. SoftBank would have to unwind their position pretty quickly to avoid more substantial losses from the sell-off. And because of that uncertainty over what their position currently is, SoftBank fell more than 7% during trading in Tokyo today. And we continue to see NASDAQ futures falling nearly 1%. Cash market going to be closed today, but futures still dropping, and that could eat further into SoftBank's profits. Now, the question over whether this impacts the underlying market, there's a lot of debate there, but you can just look at my next chart to see that something clearly is going on. So I'm looking here at call options on U.S. stocks, and really since that March low, the volume has absolutely exploded. Now, there's a lot of retail interest. There's one strategy where you buy the call options and own the underlying with hopes that banks on the other side will have to buy up that underlying. But in August, we learned that SoftBank is betting more money on equities, U.S. equities, and then we really see this huge ramp up in volume. So that could be caused in part by SoftBank. Either way, according to Goldman Sachs, previous call volume was 3 times less than it currently is. So according to Nomura, we have seen this tail wagging the dog effect where SoftBank and others buy these call options, and that impacts the underlying market, which for now seems to be falling, Francine.
Danny, some retail investors will have been hit hard by Tesla on Friday. Run us through what happened.
Yeah, there's another one of these stocks with a lot of call option interest in it. And Tesla has itself dropped over the past 3 days. But during extended trading on Friday, it fell as much as 8% after news that the S&P had decided not to include it in its blue chip index. We really have to remember here that S&P 500, its constituents are decided by a committee. It's not automatic. Once Tesla reaches a certain market cap, it will go in. But part of the reason of the run-up in Tesla was the idea that it would be included in the main equity index, get more interest from passive traders, a lot of benefits that go along with that. So Tesla did end up ending the post-market trade on Friday unchanged, but it's very possible that when the cash market opens again tomorrow, bulls will be very discouraged, Francine.
Danny, thanks so much. Our Danny Berger there with some of the latest market moves. Now, coming up, back to the cinemas. Tenet's success has been mixed with a muted response in the U.S. This is Bloomberg.
has been interrupted. Uninterrupted service is peace of mind. Kimmy from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
The investment bank merger is something we have been discussing actually for months. This is not a cost exercise. There will be some cost benefits, but it's really about having one underwriting business, to have one investment bank globally, one equities business.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacquet here in London. Now let's get straight to the Bloomberg First Word News here in London, as well as Leanne Gerrans. Hi, Leanne.
Hi, Francine. India's overtaken Brazil as a country with the second most cases of coronavirus. The nation has confirmed more than 4.2 million infections. It's also the third worst country in terms of deaths. More than 71,000 people have died from COVID-19 in India. Here, the UK is stepping up preparations in case no trade deal is reached with the EU. Today, Boris Johnson will say he's willing to walk away rather than compromise on what he sees as the core principles of Brexit. At the same time, his government is drafting a new law to dilute the legal force of the divorce deal he signed with the EU if outstanding issues on Northern Ireland cannot be resolved. Protests have flared up again on the streets of Hong Kong, leading to hundreds of arrests. Activists marched through the Kowloon area and blocked the streets with barricades. Their main aim was to protest Hong Kong's delayed legislative council election, which was scheduled to take place on Sunday, but has been pushed back a year due to the coronavirus pandemic. The demonstrations ended a period of relative calm since the implementation of a new national security law. And dramatic scenes in tennis. Novak Djokovic has been kicked out of the US Open in extraordinary fashion. After losing a game, the tennis world number one angrily smacked a ball behind him, hitting an official in the throat and prompting the chief umpire to suspend the match. It's a stunning end to his 29-match winning streak and bid for an 18th Grand Slam title. Global news 24 hours a day, on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thanks so much. Now, Hollywood's first big test in the age of the pandemic has mixed results. Well, Christopher Nolan's Tenet made $20 million in the U.S., with the markets of California and New York still shut. But it has been received enthusiastically overseas, where ticket sales totaled $129 million after 2 weeks. Now, the film needs to make $200 million plus marketing costs to recoup its budget. There are still a few big films scheduled for release this year, including the latest James Bond offering and Wonder Woman 1984. But can the industry actually get back to normal without a vaccine? Well, we're very pleased to welcome Tim Richards, founder and chief executive officer of View Cinemas. Tim Richards, great to have you on Bloomberg Surveillance. First of all, when you look at the UK, so you operate in the markets of, Europe, basically, Europe, UK, and Taiwan. How much capacity, how many seats are you filling at the moment?
Well, we have different social distancing laws in each country, but kind of on average, we are filling up about 50% of our seats, and then we have the geographical or social distancing for the other 50%. But I think it's important to remember that as an industry globally, we typically have 20 to 30% occupancy rates in any event. So we've always had excess capacity. So the actual social distancing laws in our markets in Europe haven't really affected us at all.
What, Tim, is your main concern going forward? If there's not a given vaccine, what countries where your operations are present will be at risk?
Well, we're looking forward right now. We're going to be living, until there's a vaccine, we're going to be living in a world of hotspots, and hotspots are going to come up, and we're seeing that across all of our markets. We've been seeing that now for the 6 weeks that we've been open in Europe. And we're going to become, I think as a society, we're going to become faster and quicker, more adept at jumping on those hotspots with tracing, with testing. And I think, there is a chance we might lose one or two cinemas in those hotspots in different markets. We might lose Bonn, we might lose part of northern Milan, but I don't see a situation anymore where we have full lockdowns. And I think, huge credit to Warner Brothers and Christopher Nolan for really having kind of the vision to move away from what had been the norm, a global day and date release of movies, and really look at monetizing where they can and with markets that are open. And, yes, different countries have come into this epidemic and are coming out of it at different times. The US right now is a little bit behind other parts of the world. And what Warner Brothers and now what the other studios are doing is they're looking at that, and they're looking at 70 or 80% of the screens in the world are now open, and they're jumping on that opportunity. And then on the basis that several weeks later, they will be able to then release the movie in the markets as they open up, which is really the plan with Tenet, and that's why you saw Tenet kind of roll out a week or two later than it did internationally.
Tim, how are the relationships with landlords actually coming out of this no revenue period? Did you pay them? Did they give you a holiday rent?
I mean, we came into this in late February. We lost part of our circuit in Lombardy, northern Italy. And we knew we have an operation, as you mentioned, in Asia and Taiwan. We knew this was coming. And it hit hard and fast. And, it took me 20 years to build this company, and then within a matter of 3 weeks, we were completely closed down. And we have three main cost areas. We have studios, we have people, and we have property. The studios have been amazing partners, and we work together and continue to work together more than we ever have. With the furlough programs that existed in all of our markets, we're able to work with local governments, and we were able to keep, which is really important to us, all 9,500 of our employees. We have not had to let go, as of today, we've not had to let go a single employee. And then finally, it was property. And what we saw with our landlords was, we are anchor tenants. We drive footfall into high streets. We drive footfall into shopping centers. And they started working with us about 2 months into the epidemic because they realized they needed us. And they started acting as partners with us, and we've been getting major rent concessions with all of our landlords.
Tim, a 1948 U.S. ban on movie studios actually owning cinemas was lifted last month. Does it mean that we should expect deals? What does it mean for View?
Well, I think, there's been a lot of hype around that, and as you know, it's been around for a long time, 60, 70 years. But I think that the world has moved on, and with the subscription services coming out, the Amazons and the Apples and the Netflixes of the world, I think that particular law became less relevant. I believe the future absolutely is vertical integration. I believe that content producers are going to want to control ultimately all the different channels, and the future is really going to be two channels. It's going to be one theatrical out-of-home experience, which will be with us, followed by either a PVOD or a subscription service, depending on the actual film itself.
So does it mean that View's for sale?
We've been private equity backed now since I started the company 20 years ago. We've done 4 rounds. We have fantastic partners right now with Omers and Aimco, who've been with us for a few years. And part of the appeal of Omers and Aimco is they are really long-term capital. They're pension funds, but they're still private equity. And if there was an opportunity in the future, we would always look and listen.
Mulan was released on Disney Plus this weekend. Are you concerned that Disney and other studios will start releasing on streaming instead of releasing it in cinemas?
Well, if you look at what's happened the last 6 months, this is obviously absolutely unprecedented, uncharted water for everybody in the industry. But there's really only been 2 movies moved. And the first was Trolls, and that was for very obvious reasons that Universal had done a very large retail deal in the U.S. market. They'd spent a lot, over $100 million apparently, in P&A, marketing, promoting the film. And then Mulan. And Mulan is a big screen movie. And it was disappointing, but Disney have been amazing partners with us. And there was a lot of reasons that that movie was released to Disney Plus. And in some markets, it will be released theatrically. But if you look at all the rest of the movies during that period, they've all been moved. And even Kingsman recently, it was moved into next year. And I think the problem that they were looking at with Mulan is that next year is almost this incredible year for movies, because we have all the great movies from 2021 to begin with, plus you've got all these amazing movies that weren't released in the last 6 months all together. So we're looking at next year as going to be a really exciting year. And our expectations right now are that the business will return to normal levels by sometime the end of next year, and we'll be back on track and hitting the ground running again in 2022. It's important to remember we came into this on a record-breaking year, $43 billion in global box office, biggest year in history, biggest movie of all time, The Avengers, biggest R-rated movie of all time, The Joker. I mean, this is a growing, vibrant business, and we're probably guilty of not getting that message out enough. We kind of just get on with it, but we came into this very, very strong, and our expectations are that within the next 12 to 18 months, we're going to get back to where we were pre-COVID levels.
Tim, thank you so much for joining us. Tim Richards, their founder and chief executive of View Cinemas. Now, coming up, the big bounce back. Italy's finance minister tells Bloomberg the economy will rebound faster than expected. We'll hear from our exclusive interview next. This is Bloomberg.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
I do double down on helping other Black founders, whether it's fundraising, hiring, growth, product, whatever it is that they need.
The measures we have taken so far has been decisive in containing the economic impact of the crisis and preserving our productive capacity and jobs. But the recovery and resilience plan will be oriented to the future, to the transformation of the Italian economy on the line of innovation, sustainability, and social and territorial cohesion. So we will focus the plan on investment and investment aimed at enhancing our growth potential. So it would be investment in innovation like ultra broadband, cloud, supercomputing, European project of common interest like hydrogen, batteries, microelectronics. We would support the private sector to invest more in innovation and to support the process of reduction of carbon emissions. We would boost our infrastructure equipment, the immaterial infrastructure like broadband, but also material infrastructure, in particular in the south. And we will invest a lot in human capital, education, research.
Minister, Italian debt is a big concern for investors and foreign markets. You mentioned in your speech at the Ambrosetti Forum a new mechanism to reduce the debt-GDP ratio in a solid and sustainable way. Could you give us some details on how much you think it could lead to as a reduction?
We will present at the end of September our fiscal document, which will have not only a 3-year horizon, but also a longer-term horizon, where we will define a trajectory of reduction of our debt-GDP ratio that would be significant and sustainable. We have the opportunity to do that via medium-term fiscal measures, and also thanks to the impact on growth and growth potential of the productive investment that we will deploy with our Next Generation EU plan.
Your government has mentioned an 8% estimate for GDP contraction this year. Now, what do you think the true number will be? 8, between 8 and 10?
The 8% contraction forecast was a forecast done in mid-April. As we said already, it will be revised downward. But contrary to other forecasts that have predicted a very significant decrease of GDP, two figures, thanks to the positive rebound that we are seeing for the third trimester, our downward revision will be limited, and we expect a one-figure reduction of GDP for 2020.
And for next year, for GDP?
Next year, we will have a positive increase. We have not yet defined our forecast. You will see soon. And I think that in 2022, we will be able to arrive to our pre-crisis GDP level.
Right. Now, Italy's public finances have obviously taken a hit with COVID and with the national lockdown, one of the strictest in Europe. To what extent are Italy's public finances sustainable only because of the current support from the European Central Bank?
Monetary policy of ECB, of course, is extremely positive, but it has to be taken into account also the strong fundamentals of Italian economy that make our debt fully sustainable. I have to say also that we are seeing, even in this difficult moment of the crisis, for many months, since this government entered into force, also a very positive trend of fiscal revenue. As you know, we had a very significant downward revision of our deficit for 2019, and one of the factors that are making us improve our forecast for GDP is also the recent data on fiscal revenue, tax revenue, which are positive. So we have a number of elements which make us in the condition to define a trajectory which will further improve the sustainability of our public debt.
Well, that was Italy's Finance Minister Roberto Gualtieri from the Ambrosetti Forum. Now, coming up, we speak to the Chief Executive of the European House, Ambrosetti, Valerio De Moglie. We'll talk about Italy, and we'll talk about the conference. That's coming up next, and this is Bloomberg.
we are above forecasts. 1,800,000 jobs is the total non-farm payrolls, with 17,000 additional jobs added in terms of net revisions.
You still got 1.8 million with a big decline, almost a full percentage point drop in the unemployment rate, which will move to single digits easily in the summer and fall.
Leading up to this data, there was a lot of reason to suggest that the pace of increase had slowed. And in fact, what we see in this data is, of course, it has slowed. But the good news is that it is continuing. And it is continuing despite some slowdowns that we're seeing around the country as a result of an increase in cases.
People tend to focus on the growth rate. The big issue is the depressed level of spending and income in the economy, which is reflected in the level of the unemployment rate of around 10%.
Does, as you say, have some catching up to do on that front. So we are expecting to see a little bit of strength coming through at the start of trade. How long will it last, though? The perennial question.
Economics, finance and politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, the Prime Minister Giuseppe Conte's government is under pressure to switch the focus from protecting jobs and businesses to kickstarting growth. It's now drafting projects for Italy's expected €209 billion share of the EU's recovery fund. Well, we're delighted to be joined by Valerio De Molli. He's a managing partner and chief executive of European House Ambrosetti, which is hosting the 46th edition of its annual forum in Cernobbio. Mr. De Molli, thank you for joining us. And you were really the first conference where you had a number of ministers, a number of policymakers meeting in person in a forum. And you were just telling me with then various technology enabling others to join by hologram or by video. First of all, how was it actually, having a conversation with policymakers in a room together?
Yes, thanks, Francine, for having me with you back again. It's a great honor and pleasure. Well, in fact, I have invented a new definition. It's a Fijigram event, physical, digital with hologram. And I mean it. We had 34 speakers in person. We had 11 in video conference, digitally connected, and we had 24 participants, speakers and guests in hologram, including Hillary Clinton, including the former Secretary General of United Nations, Ban Ki-moon from Seoul, the Foreign Minister of India, the Foreign Minister of Russia, and so many others. So it was a big experiment. We respected all the sanitary concerns, the social distances and everything, the gels, the masks, and we were very careful in that concern. We tested all 300 employees of the European House Ambrosetti, leading Italian think tank, all the 400 employees of the Villa d'Este and suppliers. So we started with a procedure respecting the sanitary concerns. And we did it. It was a very, very great success. 9 governments participated from all over the world, 19 countries, the entire Italian government, 2 heads of states, and a number of others. Great, great success. We are very much satisfied. It was, as you said, the first experiment. Digital, hologrammatic, and physical.
Valerio, when you look at what actually came out, I know you were telling me there's a number of research papers. I mean, how much were people worried about the economy? We also had at your wonderful forum an interview with Mr. Gualtieri, the finance minister of Italy, who seems quite, more optimistic about COVID-19 and the impact on the economy. What was the mood like? Were people still very worried, or do they see bright spots in the economy?
Well, We have created since years what we call the Ambrosetti Club Economic Indicator, which is an indicator that every quarter measures basically four things: the short-term sentiment, the 6-month sentiment, the idea for investments from business leaders, and the sentiment for employment. In all the four indicators, we've got 70% improvement. The indicator goes from -100 to +100. In the first 2 quarters of 2020, we registered -60. Was the worst level ever reached since the start of this specific indicator, which is extremely sophisticated and of great quality. Now we are basically on all the four aspects, we are around -20, which means that we remain negative, but not as dramatically negative as we were before. And you also can assess this better mood in the economy in the latest available data. We created in July 85,000 new jobs over 1 month only, which is not bad at all. And as Minister Gualtieri anticipated in the interview he gave to you exclusively, the economic impact over summer seems to be much better than initially estimated. Overall, one of our... Please.
Valerio, too short a time today, but we'll have to get you back on very, very soon. Valerio De Mori, the managing partner and chief executive of European House Ambrosetti. Now, coming up, we have 2 more hours of Bloomberg surveillance. Tonkin actually off because a lot of the markets in the U.S. are closed because of Labor Day. So if you're American and watching, thank you so much for joining so early. This is Bloomberg.
Nós aqui do Brasil, eles querem proibir nós na mineração, produzir a mineração, né? E vem as empresas, grandes empresas que nós aqui do Brasil não tem condição de trabalhar nela, eles pegam, tiram o minério e levam quando eles querem. E nós no Brasil aqui, que mora aqui no Brasil, nascemos no Brasil, e fica sem nossa produção.
Sou pai de família, né? Eu tenho filhos estudando e eu não posso me acovardar ao ponto, né, de deixar a minha filha passando necessidade ou a minha esposa passando necessidade. Então a gente se precaver, vai fazer o quê? A gente vai esconder, a gente vai correr deles, né, enquanto tiver perna. Agora desistir nunca, a gente vai continuar trabalhando porque eu preciso sobreviver, eu preciso dar o sustento para minha família.
We know it's a pandemic, and we want to be very responsible for pricing. We plan to underprice this vaccine for its value, especially in the pandemic phase.